Hi everybody, this is Asmita Neve Pawar from Conversations Mumbai. Hope you all are at home and you are safe. Today we'll be talking about a very important topic. From last few weeks we have been battling with corona, and I'm sure if we follow all the guidelines given to us by the government and the medical authorities, we should get through this very soon. But the question here is, what after this crisis? Once we get through this crisis, what after that is the question over here. What will happen to the economy? Will people lose job? So we have n number of such questions and lot of confusion around it. So today we
Yeah.
have Dr. Abhijit Phadnis. He is the director of Litige Financial Council Private Limited, a company that he has set up for consulting and executive education. He has been a national rank holder throughout. When I say throughout, I literally mean throughout. CA 11th rank, CMA 2nd rank, CS first rank, CFA third rank. Last but not the least, he was awarded Ph.D. by IIT Mumbai for his study on factors influencing investments into Indian states. Welcome, sir.
My pleasure, Asmita. Thank you for inviting me to this important forum.
So actually, I've made a list of lot of questions. So first, is
Yeah.
it okay if we have a global view of what exactly is the impact of this pandemic on a global level, on a global economy, in terms of how is it impacting the GDP growth, overall trade, oil prices, and inflation?
Sure. So I think it's a very wide question, but I think the response to this question would also depend on how different countries have handled this situation. So we have a very wide spectrum of countries in terms of how they have looked at this pandemic. Some have looked at it very seriously. They have tried to nip it in the bud. Some were very casual about it, and unfortunately, we find that many developed countries were completely caught off guard. And somewhere in the middle of the spectrum is a country like India, which is a huge country from a population perspective. And they have been able to make this trade-off. So the trade-off, when we say, means you look at alternatives and pick up the best one. The best one doesn't mean that it has everything positive to it, but you look at that alternative which reduces the overall burden on the society and the economy. And our government said that we don't want people's lives to be lost. Every life is precious, and finally, if a person is lost, the whole family gets impacted. So
Yeah.
let's work on containing the pandemic as much as possible. So we were one of the most proactive countries in the world. So moment the first case was detected somewhere around 31st of January or 1st of February, then itself the government was in action. So we see this kind of a different spectrum all over the world, and therefore the global recovery will depend on some of the following things. One is, of course, how well the country has handled the pandemic. Secondly, how integrated it is in the world trade. So a country like China, for example, I'll not go into the controversies around how accurate their data is, etc. However, China is very heavily integrated into the world in terms of trade. Manufacturing constitutes more than 30% of China's economy, and a lot of that is exported. So when the global trade actually comes down, which is what is happening right now, one of your sub questions was also
Correct.
about trade. So nobody's in a mood right now to buy discretionary goods. People are only interested in buying goods which are survival goods, and
Essentials,
nobody is
yeah.
interested in buying a Ferrari right now or a Porsche. So obviously the trade in terms of discretionary goods gets impacted significantly, and also countries which are heavily into that trade kind of activity will get impacted even more severely. And not only a frontline country like China, but those countries which supply goods to China, the spillover also happens to those countries, and naturally the impact naturally spills over to those countries as well. Again, I will keep on bringing back the context of India in this conversation because that's finally matters for us. So luckily for us, we are a reasonably insulated country from a world trade perspective. A lot of that we manufacture gets consumed within the country. Of course, we
Correct.
also export certain things like automobiles, two-wheelers. We are emerging as very big exporters. But our exports are primarily in the form of human skill and information technology. And as we have seen, people have continued to work from home and they have been able to support activities around the world. So naturally, the impact on us is going to be relatively less because we are more insulated from global trade. But one consequence of this whole scenario where the demand for goods, the demand for transportation, the travel is impacted, the demand for oil naturally shrinks. Because if people are going to drive cars, particularly in economies like us or wherever there is a lockdown, the demand for oil naturally would collapse, and that's what happened in oil prices. So there are certain spillover effects of these things also. So when there is a collapse in the oil price, then the oil producing economies get into a panic mode. So there are these spillover effects. But coming back to the core of your question in terms of what's the impact which is going to be on the global GDP, particularly this quarter, the quarter of April to June, the impact could be very severe. It can range from 20% to 40% in different economies. So we will actually see economies shrinking during this period. Also in terms of employment, so naturally what happens is we have organizations which will take care of some of their core employees irrespective of these kind of challenges. But there is also a huge amount of labor which is, and when I say labor, it doesn't mean necessarily workers alone, but in the developed world, the concept of contractors, where people are not full-time employees, but they lend their services, is also quite high. They are like consultants. They are not on the payroll necessarily. So wherever the discretionary, there is a choice available for companies, naturally, some of that workforce will no longer be employed. And to that extent, there will be clearly a much larger unemployment during this period, which is naturally expected. The question is it going to be a permanent problem? Luckily not. While there is definitely unemployment right now, but I think in my view, it will be a problem which will get sorted out in the next 3 to 6 months, depending on how severely that economy is impacted and how proactive it was.
Correct. So will this entire scenario also have any impact on gold?
So gold prices have also surged globally. So gold prices have surged more than $1,700 per an ounce in a very short period of time. So that has happened. And talking again back into India, strong gold money moving out of India, into dollar would also create a pressure on Indian rupee, which is what has happened, because when money starts moving out of our country, the Indian rupee would naturally fall, which has also happened in our country, that rupee has crossed 76 rupees to a dollar. On the other hand, the gold price in India, which has also crossed 45,000 rupees to a tola, we express it in tola here. Correct. Globally, it is expressed in ounce. But here again, the gold price in India is a function of three things. It is a function of dollar versus rupee. So if rupee falls, gold becomes expensive in India. Second, gold prices rise globally. Then gold will also rise domestically. And third is with the duties which are imposed on the imported gold. So if additional customs duties, they have not been imposed currently, but I'm saying that if additional customs duties are imposed on gold, then gold prices in India would again go up. So therefore, this move in prices has already happened significantly. Now the question is, will this move continue as it is? So that is always the question, whether gold will, because if I say this, that gold price has risen for this reason, it should not so happen that our viewers start rushing into buying gold, because essentially what happens is the risk is understood by the market very quickly, and that gets reflected into the price also very quickly. And unfortunately, people who become aware about this a little later, or they are preoccupied with other things and suddenly start looking at prices of gold, start feeling that now this is going to be a straight line and gold is always going to go up because it has not moved for quite some time and now suddenly there is a rapid move. So from that perspective, we should not rush into buying gold straight away. We have to give a certain cooling time to see how the whole pandemic unfolds. And if it is managed well by the economies, there is no reason why gold will continue its rise.
So, in terms of what impact will this pandemic have on Indian economy, I would like to ask two questions over here. What impact will it have in terms of FDI and FPI?
Okay. So first, before I get into answering this question, let us, for the benefit of viewers, understand these two terms. First term that you used was FDI, which is called as foreign direct investment. And the second one is FPI, which means it's foreign portfolio investment. Now, let us understand the difference between these two terms. Foreign direct investment is that investment which comes into investing in joint ventures in India or in setting up a company in India which is going to manufacture things within India. So it could be either a joint venture with an Indian party, or it could be 100% owned company of a foreign entity which wants to come and manufacture things here. For example, you may have heard this about 2 months ago that Samsung decided to move a significant part of its manufacturing facility into India, and they want to manufacture far bigger number of mobile phones in India for export from India also, as well as for domestic supply as well. So this kind of an investment is an example of an FDI. And this investment stays in the country. It doesn't fly off because they take a lot of time to think about this and then make that investment. The other category of investment is FPI, which is foreign portfolio investment. So these are the people who are not investing in a company from a technology perspective, neither do they have any interest in starting any manufacturing or service activity in India. They essentially are investing in existing entities, not with a view to necessarily get involved in the management of the company, but essentially for making money out of that investment. So those are called as foreign portfolio investors, and there is a significant exposure. When I say exposure, it means significant investment of foreign investors in India. They, of course, took out a lot of money from the Indian market, estimated at about 1 lakh crore during the month of March itself. So they are not committed to any country. They are committed to making money. And once we understand the difference between FDI and FPI, the pulls behind these investments are different. So anyone who gets into an FDI in the country is with a view to take a long-term view about the country's potential as a manufacturing base, as a market, and therefore they think through far more carefully. They take a much longer time and they make that investment. They also scout for joint venture partners. A huge trade war which has been going on between US and China, and there are potentially 2,000 companies which are looking at relocating outside China. They are looking at different locations, and India is clearly going to look as an attractive destination, particularly the way we have managed this pandemic well. This would have created a significant impression on the so-called developed world, where the way methodically our government has gone about doing it in spite of such a large population and so many constraints on our resources, it's, in my view, is going to enhance the image of our country as a reliable investment destination, because finally the investment climate in any country is also impacted by the government's ability to manage a lot of these things. So finally, safety and security of people also matters. So this is a great example, and therefore I would anticipate that we have already received in 5-year period between 2015 to 2020 about $280 billion in the form of FDI. And this, of course, after a certain pause, this will again accelerate. So we should start investments in the form of FDI. Now, your question about FPI. Now, FPI are relatively fair weather friends, as I already mentioned. They are there for making a decent return. If over next 4 to 5 weeks we are able to control the pandemic quite well and take the whole effort to a logical conclusion, then India becomes a very attractive investment destination for foreign portfolio investors as well. And sooner or later, that money will also start flowing into the country. We already started seeing some signs of foreign portfolio money getting invested in the Indian market in the month of April, for example. A couple of days you've seen thousands of crores getting invested into the Indian stock market. So they are waiting for how well we manage this pandemic, and that's where your message of we all stay home and stay safe is very important.
Correct.
Because we may think that what is going to be the impact of my personal discipline of a lockdown or wearing a mask and only going for buying the crucial needs of our family and then coming back home quickly. But that discipline is going to contribute to our economy also. So
Absolutely.
We are not making any small contribution.
Absolutely. By any chance, by any chance, will the inflation reduce because of all these circumstances?
It's a very interesting question. See, what typically happens is when more money gets printed, more money is made available, usually inflation rises. So what is happening world over is, as a response to this pandemic, so there are two tracks on which every government is required to work. One track is taking care of people, taking care of their health, managing the healthcare side of it, reducing the deaths and casualties as much as possible. And second track is about reducing the economic impact of whatever is happening. So the economic impact, one of the ways of doing this is to support banks, financial institutions, in many ways, and which has happened globally, which has happened in India. Now, in this process, what happens is the Federal Reserve, for example, in the US, or Reserve Bank of India in India, starts lending, a supportive hand to banks and financial institutions. That also makes money easily available to banks and financial institutions. And when money is made available cheaply, interest rates are being brought down, like what has happened in India already. And it has happened in the US and other economies also. Generally, it fuels inflation. So your question is absolutely valid, whether it will fuel inflation. In India, apart from cheap money, the other factors which also impact inflation in India is the efficiency with which the internal systems are being run. So if we are able to move goods quickly, our supply chains are restored, goods can move from state A to state B without any difficulty. So GST has enabled this, but nonetheless, because of this pandemic, certain checks and balances have again been brought in. Now that slows down movement of goods. And similarly, because manufacturing is constrained right now, you cannot have full-fledged manufacturing. There is a risk of the prices going up. So this is one side of it. The other side of it is what I would call as imported inflation. So what is the meaning of imported inflation? If, as we already discussed, rupee has fallen to 76 or beyond to a dollar, this also is an invitation for inflation, because every imported thing starts costing more. So earlier, if $1 was equal to 70 rupees, an imported thing would have cost 70 rupees in India. Now it will cost 76 rupees.
Correct.
So every imported good starts becoming more expensive. But the biggest impact in case of India comes out of oil and its derivatives. Luckily for us, oil has fallen a great deal. So oil, in spite of the recent rise, is hovering around $32 to a barrel as we speak, and which is very much affordable for India. Generally speaking, $55 to $60 to a barrel is a level in which India can manage. And anything cheaper than that is better for us. So the risk of inflation being imported into India is relatively very less. Secondly, if we are able to gradually come out of the lockdown, we will see certain announcements, hopefully, about how this lockdown is going to be gradually withdrawn. And if that happens, and if supply chains are restored, manufacturing gets kick-started, then the risk of domestically goods not being available, that risk also gets reduced.
Correct.
And to that end, also the inflation can remain under control. And luckily, because interest rate is low right now, nobody is going to go and buy houses right now. Nobody is going to buy cars right now. Nobody is going to go and buy two-wheelers in a hurry. Everybody is going to wait now. And therefore, that risk of inflation is also low relatively, where it creates a demand for goods arising out of low interest rates. Because as all of us can easily imagine, when we can borrow at cheaper rates, we tend to borrow more and buy things like cars or two-wheelers far more easily.
So, yes, sir.
Yeah.
So that brings to my next question. Which sectors have been impacted the worst?
Yes. So basically, as we can visualize for any common person, broadly we can divide our expenditure into two parts. One, which is absolutely essential for living, and secondly, that expenditure which is required for a lifestyle. So, for example, food, clothing, house, all these are absolute essentials. Now, housing is taken care of for most people. So essentially, clothing is also taken care of. So food is something which is right now absolutely a must for every family. So that is not something which is discretionary. You have to buy food irrespective. But I have a lot of other discretionary expenditure. The discretionary expenditure would include some new clothing that I want to order. If I want to buy a car, if I want to buy a two-wheeler, I want to go to a shopping mall, see a movie. All this is discretionary expenditure. And the discretionary expenditure part has been impacted the most. So obviously the cinema halls are all shut down because they are not essential for life. Car dealerships, two-wheeler dealerships are all shut down. But we cannot stop consuming medicines, particularly people who are dependent on them for certain chronic or other diseases. So pharmaceutical industry cannot be impacted because their business is perennial. So that is something which is not discretionary. We have to buy medicines wherever required. So that will not get impacted.
So this brings to my next question, sir. What impact does the whole pandemic situation have on the financial market in terms of gold prices, share prices, bonds, and currencies?
Yes, so I think some bit of this I have already answered
Yes.
a little earlier. So just to sum up that answer, what happens is that during these kind of periods, money starts moving into the United States, considered as 25% of the global GDP, 24% of global GDP, and it is considered to be a safe haven currency. And that creates pressure on currencies of emerging economies, including India, sometimes unfairly, but that is the way the markets behave. And that, as I mentioned earlier, also creates an increase in prices of commodities like gold, because gold is considered another safe haven currency. And as I mentioned earlier, the gold prices in India are a function of the global price, which is currently prevailing, the dollar rupee exchange rate, and thirdly, the customs duty. And therefore, gold prices have also risen in India. On the other hand, when people fear, they are very keen to go away from riskier asset classes. So equity is prime example of that, where people, when they get fearful, they start selling shares. And when that selling accentuates, like what we experienced in the month of March, the stock prices very rapidly fall, and which is what has happened. The correction has been quite furious, as we can say, fast and furious, where 35% to 40% of valuation has just got eroded. But as they always say, that the best time to buy such asset classes is when the fear is at the maximum. So where there are a certain set of people who are very fearful and would start very quickly selling their shares, and they would have sold a lot already. There are a set of investors who are willing to take a long-term view and would have accumulated during this fear sale because the prices have collapsed to a level which was last seen 4 years ago in case of some companies, 5 years ago in case of some others, 6 years ago in case of some others. So it's like you going back in history suddenly, and as if you have woken up in the morning and suddenly you find a price which you would have seen on your calendar in 2014 or 2015 or 2016, and some people would have grabbed that opportunity. So like I mentioned earlier, that those asset classes which have already moved up rapidly, like gold, we should be a little more circumspect before we invest money in gold, because gold's rally has happened on this fear. But as the fear subsides, gold will also correct. On the other hand, if the fear accentuates, God forbid, that will not happen. But if that happens, then the gold prices can go up. But always we must remember that when it comes to financial markets, we are always looking at the future, and future is uncertain. And therefore, in every such decision, we are always looking at probabilities.
Correct.
So what is the probability of gold going up versus gold going down? I would say that if you were to take a 3 to 6 month horizon, the probability of gold falling is higher than gold going up, right? On the other hand, there is a higher probability of shares going up in next 6 months than they falling. So it is not the history that we should be focused on, but it is the future that we need to focus on, which is what is the principle of financial markets. And this is where for people who have the money, they can start gradually investing in shares. But one also has to be very careful. It should not be that, because stock prices have collapsed, we should one day go and dump all our money into equity markets. On the other hand, we have to also manage our money well. So mind management and cash management are two important essentials of investing, which are often not looked at. But this is the time we need to do that. So manage our fear well. And secondly, manage our money well, which means that ensure that you have sufficient money to take care of your monthly expenses over next 2 years comfortably, and that gives you a good sleep every night, that you have sufficient money to draw from a bank or draw from very safe assets and run your family. So that comfort is absolutely required.
So that also brings to my next question, sir. What impact this entire situation will have on education sector, especially on foreign education? How difficult or easy it would be for students to travel abroad for education, or will everything become online?
I think to a certain extent there is a setback to the image of so-called developed countries.
Correct.
Where the kind of deaths which have happened and the kind of spread of the pandemic has happened, I think the parents of the children will also start thinking about the safety first, because first safety and only then education.
Absolutely.
As we often say in Marathi, "Shir salamat to pagdi pachas."
Correct.
So it is the safety of human life which becomes very important. And in that situation, we may see a bit of a setback to students going abroad from India for a certain period of time. But I think gradually, as they always say, public memory tends to be short. And after a couple of years again, things will catch up. Correct. But it's a great opportunity for Indian universities to use this period of next 2 years or so to actually, quickly revamp, their own standards. And Indian universities are also learning that game in terms of upping their performance levels, both from research perspective as well as teaching methods perspective. So hopefully, if we are able to do that catch up, then it may become a permanent trend. Correct. But otherwise, there will be a setback for a year or two in terms of Indian students going abroad. And that's a large community today.
Correct, correct. Yes, sir. So next I've listed, in fact, three questions which may or may not bring any structural change. So the first question is there any possibility of new jobs being created?
Right. So, so this is something that we need to reconcile with this new world where jobs. So, what I mean by jobs is not somebody's work being taken away out of circumstances like this. I'm saying a job in its basic nature um, getting fundamentally changed. So, from this perspective, certain jobs continuously get destroyed and some new jobs continuously get created. So, what would happen, as I would visualize, is that as the world is moving away from brick and mortar to virtual world. So, what do I mean by brick and mortar? What I mean by brick and mortar is that you needed much larger spaces earlier to conduct business activities. You needed much larger office spaces. You needed huge buildings to house 20,000 people together. But what is going to happen going forward, and perhaps with these lockdowns, people have also learned this new art of working from home.
Okay.
So many companies may actually, have a piggyback ride on this phenomena and say that instead of me creating huge offices and creating what they call as recurring expenses every month in terms of upkeep and maintenance and so on, we will create only limited spaces, and people can work from home, and they can be supported in many different ways. So as things become virtual, we will clearly need new skill sets to support all those virtual activities, which would go on from different, from in a distributed way. Similarly, because of disruptive manufacturing technologies, it is quite possible that the large scale with which manufacturing used to happen gradually, I'm not saying it will happen very quickly, but over the next couple of decades, manufacturing can also get more distributed. So, for example, 3D printing technology through which you can actually print a house. For example, China brought down the cost of low-income housing by using 3D printing technology. The raw material being used was the rubble of destroyed buildings, and that was recycled, and they brought down the construction costs dramatically. So in Indian rupees, only 350 rupees a square foot as compared to 2000 or more, which is what is the cost
Correct.
in India. So what would happen is that a lot of these activities can also happen in more distributed way. And some of these skill sets, which are right now concentrated, would be required in larger numbers in multiple centers. We could also see those kinds of changes. We are also seeing changes where, for example, the global automobile manufacturing model has already started looking at themselves as service providers and not as car manufacturers, which is what their view about themselves was. So today, car is being looked at as a service. Car is not being looked at as a product to be bought.
Correct.
And this is a trend which is catching up. So that being the case, companies would also be very happy to get into more distributed manufacturing rather than creating risk of manufacturing in one location, like what happened recently in China, where one entire province went into a very quick lockdown, and that impacted the whole world. So some of this is definitely going to create jobs, but are they going to create jobs tomorrow? The answer is no. But as we discussed earlier, as people are learning new skill sets through cheaper courses, they can prepare themselves for these skill sets of tomorrow. So that is where we can attract more work into India down the line because of the skill sets that more and more people are developing now.
Correct. And is there a possibility that due to the pandemic situation, people will lose job?
I think the loss of jobs due to this pandemic is going to be short term, right? Because this loss of job is not a trigger of a technological change, but it is a trigger of a healthcare issue, which hopefully gets managed over next 3 to 4 months, right? So these loss of jobs are not going to be permanent loss of jobs. Of course, for anybody who has lost a job, it's a very severe challenge. But I would say from a overall and a long-term economic perspective, those jobs are going to return.
Was what will happen to the tourism industry, and will people
Right.
stop traveling abroad out of fear?
I'm just on the lighter side. The other day, my old colleague, almost we worked together 18, 19 years ago when I was in employment. She posted on Facebook saying that henceforth she's going to do 10 following things and she's not going to do the following 10 things. So among the 10 things that she said she will not do, she said, I'm not going to go abroad for travel. Right? And among the things that she said she will do, she said, I'm only going to travel domestically henceforth. Right? Now, what is going to happen is jobs in India's hospitality and travel sector will get created in large numbers. But the Indians who are traveling abroad, and more than 2 crore people travel out of India for leisure, that number, if it starts traveling within the country, then we'll have more opportunities coming into our country. And in fact, that's a commitment my family and I made about 10 years ago, saying that we will only take vacation within India.
Correct.
May not offer as much of facilities as the typical travel destinations globally may offer, but let us keep faith in our country, and those standards will go up, and we have clearly seen that those standards have moved up from cleanliness perspective, and from that perspective this pandemic is just going to make that progress faster in terms of cleanliness. People are also going to realize the importance of that, and that's going to create job opportunities in the travel and tourism sector in India, but that's going to be at the cost of travel and tourism somewhere else.
So I guess you have rightly addressed that question already, that at least
Right.
for next couple of years, because out of fear people might not travel abroad, but there is a
Right.
very good chance of people traveling within our country.
Exactly. Also, what has happened is that this pandemic and some of the trade wars have also created a very strong sentiment of nationalism around the world.
Absolutely.
So people are saying that let my brethren within my country get jobs. I should not get into creating jobs elsewhere. And this
Correct.
has become a more and more stronger feeling, and that is good for our country, because we have the median age of our population is between 27 to 28, which means about 67.5 crore population is younger than 27 or 28. Now, so many people are there in the job market or going to come in the job market, and it is responsibility of each Indian who can afford to ensure that we take care of our own brethren within the country, right? Rather
Absolutely.
than filling coffers of others. Nothing against others, but we have a pressing need about reviving our own economy.
Absolutely. And that brings me to the next question, sir. What impact will this pandemic situation have on uh, small scale industries, startups, and unicorns like Baju's, Ola Cabs, Swiggy, and Oyo, the huge startups?
Right. Right. So I think first let's talk about the SME sector, the small and medium enterprises in the traditional sense. Those who have been in manufacturing, who have been rendering certain services, and so naturally in any such pandemic, what happens is that their ability to realize their money from their own customers gets impacted.
Correct.
On the other hand, they cannot afford not to take care of their own employees. So it becomes a stretch for them in both ways. And it does create in the short term some kind of a cash flow problem for them. And that is the reason why the Reserve Bank of India has allowed banks to provide what is called as moratorium. The moratorium as an idea means that people who have a certain obligation to repay loans and interest to the banks can give them a certain period where they don't have to take that burden, and they can meet their own other cash flow needs on priority. It is also important that our large companies also stop looking at SMEs as vendors, quote unquote. Unfortunately, when I engage with very large companies in terms of training workshops, and I try to always make this point to them that don't treat them as vendors. So quite often I see this attitude that all employees are required to be taken care of and all vendors are to be exploited. which is a very, very sad state of affairs. And this is not something which is good. We must also look at vendors as an extension of the organization, and they're also doing certain value addition process to the organization. And this is the time when large corporations have to stay with their vendors and say that, hey, I have so and so amount which is due to you, and I'm releasing that right now, even without waiting for the credit period. Maybe negotiate a bit of a small discount, which an SME may not mind doing it, so that they're able to manage their cash quite well. So this kind of a generous attitude is shown by some companies, but they are in a tiny minority. Most companies tend to exploit the vendor at their own cost, because finally, when vendors who are small size, when they borrow money from banks, they pay a much higher rate of interest as compared to the large corporation. So right now, a large corporation can very easily draw lines of credit from a bank and rather pay the vendors in time, just as a gesture to support the economy, and that will go a long way. Now let us look at the impact on startups as well as the unicorns. I think unicorns are far better placed in terms of managing their businesses, because their business models have already been well established. They have people who have already financed them. They clearly have a lot of stake in those unicorns, and therefore they are not going to let them fail in any way, and they can easily continue to support them, if not in the form of equity, in the form of short-term loans to tie over the difficult situation. Because the typical challenge with unicorns is that they don't have physical assets. They're all intellectual assets. They have customer networks. And because they don't have physical assets, they cannot easily borrow money from banks, because banks look for security. And they don't have, everything is out of rented spaces quite often. It's all intellectual property, it's all technology against which a bank will not be able to lend. But their private equity investors can easily lend money to them. The challenge with startups, other startups, is who have not yet got their funding in place, is that survival for them becomes very difficult during this period, because as it is their hand to mouth, and unless some angel funding is arranged for them, they may have to actually close down their operations for a certain period and again restart it. So the impact will vary from these three segments. So we have to bucket them into three different groups, and each will have its own challenges. So you're right that the smaller startups will actually require more support, and if they've already arranged a certain amount of funding, then people who have financed them will obviously have the empathy, and luckily for them, their overheads may be relatively limited. And if they are relatively limited, then at least some portion of the salary and compensation to those employees can be taken care of, if not full, so that at least those startups can continue to breathe. And then they can come back to normalcy once normalcy gets restored everywhere around. Because right now, physical meetings with people are also not possible. So
absolutely.
For startups which have not been able to raise any funding so far, it's going to be a very challenging period for a couple of months, because while they will have virtual meetings with people who are going to finance them, but personal comfort, physical meetings, actually visits to their location, all that is going to be more difficult.
Correct. And sir, that also brings to my next question: where exactly to invest is the bigger question. Equity, real estate, gold, banks, FD, cryptocurrency. In this situation, which is the ideal thing to be? Where should we invest?
Right. I think let me begin with the easiest answer. The answer is that the first principle of investing is invest in what you understand. We have no understanding of how cryptocurrency works. So we should not go after any kind of a fad. And that's what I had mentioned there, that we should not, I would strongly recommend that we should not invest in cryptocurrency, because we have no understanding of how the value gets created. So what are bonds? Bonds are essentially a borrowing which is broken down into small securities, and these securities are traded. For example, the government of India borrows 5 to 6 lakh crores a year, and maybe in 2021 it will borrow even more because of the pandemic. So when they borrow this money, the borrowing is broken down into what is called as a government bond or a government security, which let us say is of 1,000 rupees, right? And that 1,000 rupees worth of face value of security can actually get traded in the market. And that globally is also called as a bond. So one option that we have when we are looking for a fixed return from any investment, then we have two choices. One is to put money in a bank deposit or put money into a bond. Now, when we put money into a bank deposit, it's a contract between us and the bank, and we don't have to worry about market fluctuation. We have to simply negotiate the rate of interest, and we keep the deposit, and we have an assured rate of interest which comes our way. But that is not the case with bonds. The bonds, while they also have a certain coupon, which is a rate of interest attached to the bond prices fluctuate in the market. So in India, we have two opposite trends, which are one supporting and one opposing bond prices. What is supporting bond prices is that whenever interest rates fall, bond prices go up. So as we discussed earlier, interest rates have been reduced in many parts of the world, and they have been also reduced in India. That makes bonds very attractive. But what is the counterforce to that? The counterforce to that is when the government starts borrowing larger sums of money, like because of the challenges that we have, then what happens is the bond prices tend to fall. So we have two opposite forces right now working. So people who are not comfortable with these forces, but who want a certain fixed income every month, I would recommend that you go for fixed deposits. And I would also recommend that you go for fixed deposits of a longer tenure relatively, because my view, again, this is my view, and therefore you should take it with a pinch of salt. My view is that the interest rates are going to, over a period of time, remain on the weaker side. And therefore, if you keep a short-term deposit and again get into renewing it, there is a chance that you may get a lower rate of interest, like what has already happened. So those who have invested for longer term already are well off, and those who want to invest right now can look for a longer maturity of 2 years or 3 years and lock in a reasonably good rate of interest, particularly if you are a senior citizen, and not expose yourself to the vagary of bond prices going up and going down. Coming back to equity, like I mentioned earlier, this is a great opportunity to invest in equity because as I mentioned, there is a collapse in equity prices already. So if you have very less exposure, what I mean by exposure is if not much of your money is already invested in stock market or mutual fund schemes which invest in stock market, then this is the golden opportunity where you can start putting money. Coming to real estate, my view about real estate is that there's no need to rush into real estate during this time for two reasons. One, in the context of the commercial real estate, as I mentioned earlier, because the world is moving from brick and mortar to virtual, the need for commercial spaces, and particularly if people or companies find that so if companies find that people are able to comfortably work from home, then that model can become bigger down the line, and the need for commercial spaces can only reduce. Secondly, the other thing I would also say is that as the, particularly in the urban areas, as the metro networks get developed, the cost from a user perspective of the real estate will tend to go down because longer distances can easily become more commutable than today. Just as an example, if there is a plan anyway, there is a metro which is going to be constructed between Thane to Kalyan, and that plan is anyway up there. Then a lot of spaces which is right now not accessible to me because there are toll plaza related log jams and so on and so forth, and I don't have access to necessarily good schools or good shopping because I have to step out of the city. But moment the connectivity happens, imagine I could travel 10 kilometers away from the city and I could commute taking a metro train into a hub of shopping. and then suddenly far more land becomes accessible for development, and that will create a pressure on property prices in urban areas.
Correct.
And therefore, I would say that there is no need for anybody to rush into looking at investing in real estate. Now, here I would like to draw a difference between real estate investment versus buying a house for one's own use as a family to settle down on the family way. So, I'm right now answering from an investment perspective. If you want to buy a house to stay there because you have your social bonds in a particular locality, you have certain preferences, your other family members are around you, by all means, investing in a housing property is not a problem. But this investment is with a caveat that you're going to use it for your own residence and not investment from in purely investing perspective, where you're going to look for appreciation in prices, which in my
Correct.
view is going to be far too away. And particularly with this pandemic, that timeline gets even pushed further.
Correct.
Have I missed answering any? The gold part. The gold part, I think I had already mentioned about gold,
Yes.
that gold prices have already risen very, very quickly.
Correct.
And therefore, I would say that, we should not get into an overexposure to gold, for the reason that generally in our families, because of jewelry reasons, if you actually count and make a list of all your jewelry, I think, typically an Indian family will find between 500 grams to a kilo of gold in the family itself, even if it's a nuclear family, right?
Correct.
So we already have sufficient exposure of gold. Simply, if somebody has a kilo of gold today, it is like holding an investment worth 45 lakhs already. So if you already have that investment, why do you want to further take an exposure and add to gold? So I would say that, on the assumption that this pandemic doesn't become a very long-term issue, and the economic activities gradually start coming back to track, I would imagine that the pressure on gold from a probability perspective would be to move down rather than move up. And therefore, personally, I would not invest in gold.
Yes, fair enough, sir. So, sir, my next question is, are there any tax relaxations by the government, and how will it benefit the common man?
I think tax relaxations anytime are always welcome for anybody, whether it's an individual or a corporate. But the way I see it is that whatever had to happen from a tax relaxation perspective in terms of tax rate has already happened. I don't think we will see any further tax relaxation for considerable amount of time, because right now the government's own tax coffers, are naturally under stress. They're not able to collect sufficient taxes because of lack of economic activity. So for considerable period of time, I would imagine at least next to 2-3 years, the government will just be in a repair work, where they will ensure that their own fiscal challenges, what I mean by fiscal is their own budget management, is back on track, and that may take 2 to 3 years easily. And
Correct.
that being the case, I do not anticipate any further reduction in taxes. So we should not be with that hope that any tax cuts will further happen. That's the way I would look at it.
Okay. Sir, will there be any impact on the hard cash that people have?
So it's quite interesting, because we are clearly moving towards a digital economy. Say when the demonetization happened, the percentage of GDP that was in cash form and the percentage of GDP in cash form now is now less now, and I think this trend will become stronger and stronger in the days to come. I don't have any data, but I would guess that because of this pandemic and the fear that currency notes also can become a medium for transmission of.
Transmission, correct.
Yes, yes. I think more and more people may have already moved to using either plastic or online transfers for paying for the dues, right? So to that extent, the need for cash over a period should go down. And as we are improving our payment technologies in many, many ways, I think that trend will only accelerate. Plus, with more younger customers coming in the market, their comfort with using all this media. And as I was earlier mentioning that our median age being 28, we are going to see a huge number of people coming in the market over next few years, either in employment market or other ways of livelihood, and therefore the trend to digitize payments will accelerate, which is a good thing to happen.
Good. That also brings me to the next question, sir. In comparison to European countries, India has less fiscal stimulation. Is it enough? Can government increase it? If government is going to increase it, will it have any impact on the government?
So what is fiscal deficit? It is simply the difference between the government's income and the government's expenditure. So larger the expenditure as compared to the income, more is the deficit. So a certain deficit, so 3.5%, 4% is something which is something manageable in our context. In the context of this pandemic, it is expected that it is going to go up to 5.8%. There is a demand, and one of the political parties has made the demand just yesterday or today, saying that why doesn't the government allow the fiscal deficit? In other words, is expenditure to exceed the income by about 8 to 9%. Right? Now, if the government indeed does that, now this is where there is always this, as I mentioned right in the beginning when we began the conversation today, I had talked about what is called as a trade-off. What is trade-off? You always pick up the best alternative which reduces the damage. Now, from the people at the grassroots level, any funding that you do for them is welcome, right? Because that just helps. And the government has taken certain steps in terms of direct benefit transfers, gas being offered free for a certain period, free ration up to a certain quantity. So all those steps have already been taken. Now, the question is, can the government do more? Yes, always the government can do more, right? But the thing is that the dimension that we have in terms of sheer population, whatever you do, it gets multiplied by a huge number, and therefore the fiscal deficit can go up very quickly. Now, what is the downside of fiscal deficit going up? If fiscal deficit goes up to 7.5%, 8% rather than 3.8% or 4% or 5.8%, then, as I mentioned earlier, the government itself becomes the biggest borrower. And the government, when it starts borrowing a lot of money, there is not enough space for private enterprises to borrow, because the government itself is borrowing in a big way. So, as it is, banks are reluctant to lend to private enterprise because of what is called as non-performing assets issue. Now, if the rate of interest goes up, then the problem would be that how do we actually get our business kick-started? How do we actually get the private investment to happen? Because the rate of interest for them has gone up. So therefore, it's a tight rope walk for the government. And therefore, the government, in my view, the priorities that the government had assigned for itself was life was the first priority, more than livelihood, right? As the life part is getting taken care of, and as gradually, hopefully over next 2 weeks, if you are able to see a reduction in the incremental numbers. So what do I mean by incremental numbers? The new patients of coronavirus, if that number starts reducing over next 2 weeks, then the life related problem has come under control. Then the government will have to start focusing on the livelihoods. And therefore, some parts of the economy, as there are already some indications that some parts of the economy where the impact of coronavirus is relatively limited, right? So the government will have to take a selective approach and say that those states, and that's what they're already thinking, that those sectors of the economy which are not exposed to this risk, as well as those geographical areas of the country which have less exposure to this risk, can actually start opening up. And therefore, the livelihood issue in those spaces can get easily sorted out, right? Then the problem gets located to certain states, and within certain states, or within each state, to certain districts. So, for example, I was just going through and I realized that there are 5 to 6 districts of Maharashtra where there is not a single case of coronavirus, right? So lockdown can be easily lifted in those districts. You have to take care to ensure that traffic doesn't start from other districts into that district, but the activity within that district can resume if you're not found a single case, right? So the selective approach would be taken, and as livelihoods start getting taken care of, the problem of government supporting larger number of people will also get reduced, and therefore I think therefore the government has not rushed into announcing larger fiscal support as compared to the so-called developed countries.
Correct.
But they always have the choice to do so, down the line. So nobody is stopping them from doing it if that is required. And my view is that it can be more targeted in partnership with the respective state government rather than making it, entire countrywide announcement, because that may not be required. You may not have to transfer amounts to everybody all over the country
Correct.
when economic activities have already begun.
And sir, Indians have the habit of saving money. So in
Yeah,
this situation, will that habit help us?
I think that is greatly helping us because while we can complain that our saving rate has come down from 36% to 30% now, yet we have been saving, and therefore whatever we have saved becomes handy during a period of this pandemic. And as they often say, there is a nice sentence I read 2 3 days ago. Um, this pandemic also taught a very important lesson to us, and that lesson was that living is not expensive, lifestyle is very expensive, right?
Absolutely.
Yeah, so to manage our family during this pandemic for whatever I earlier called as non discretionary expenditure, where we didn't have any choice and we have to spend it, I think people would have realized that you can manage it with so little actually, right? So basically, a lot of our expenditure happens on lifestyle, where we actually don't necessarily need to spend money, but we continue to spend money. So these two realizations, that our savings are important, and secondly, living in India is very inexpensive. I think that's a great comfort for people.
Absolutely. And sir, that brings me to our next question. What will happen to the loans that people have taken from the bank and the credit card that people have been using?
Yeah. So, as I mentioned earlier, as a part of the monetary policy of RBI has in fact urged banks to provide what is called as moratorium. So,
Correct.
the idea of moratorium is that you don't have to pay your principal and interest. So, moratorium can be for principal, it can be for interest, and most banks have extended moratorium up to 31st May already. So, which means that you don't have to worry about paying your EMI this time. And I got my credit card bill 4 days ago, and for the first time, I found the minimum payment due, which typically is 10% of your overall credit card dues. And therefore, if you see your credit card statement, typically minimum amount due would be typically either 5% or 10% of the credit card amount. But this time, I was pleasantly surprised to see zero, which means that they are not expecting me to make the payment. They'll be
Correct.
happy if I make, but
Correct.
they are quite okay if I don't make the payment. So most banks have also offered moratorium on credit card dues. So that is something which is comforting for people in terms of their cash flow management.
Correct. And do different banks have different policies of what we have discussed right now?
So I don't have 100% answer on this. I think there will be variants which will be bank specific, because uh, I don't think it's a diktat which is a standardized diktat. It is something which is left to the discretion of a bank within contours of certain policy suggestions of RBI. So I'm not able to give you 100% answer, because I've not done a comparative study of what are the
Correct.
things. But I would imagine that substantially they will have common elements in it, which is essentially postponement of the dues. So they may, some of them may have insisted on some bare minimum interest payment but complete
Correct.
moratorium on principle. But honestly, I don't have a very accurate answer on this.
Absolutely. Sir, and this brings me to the last question, that what is the solution to this economic crisis? We have discussed a lot, but if you could just give couple of if you could list few things of what are the things that government can do, what are the things that people like you and me can do to get over this crisis? And this could also be a summary of our entire discussion.
Yes, sure. So I think first of all, we need to understand this fact that this economic crisis is driven by a healthcare crisis. It is not driven by a typical economic crisis that had unfolded during 2008, 2009, for
Correct.
example. And the good thing also is that the severity of the crisis from the propensity to death perspective is also relatively low. Unlike SARS or MERS, here luckily it is a healthcare issue and a livelihood issue. So once the healthcare issue is brought under control and people's livelihoods are restored, then it's just a matter of time that the economy will come back on its track. And therefore, as I mentioned earlier, it was the question of prioritization for each government. In India, the government first prioritized on people's lives. Now, at that problem is gradually coming under control. But I would imagine that as the health issues are coming under control, livelihood issues will become important, and therefore restoring economic activity will become very important. As we mentioned earlier, there may be pockets of pain or strain which may require a larger fiscal support, which may be announced from time to time, or kickstarting of small and medium enterprises, or giving some support to startups which may be under a specific pain. The government may do something to help such sectors. I just gave those as examples. There is something which the central government is doing. There are some things which the state governments are doing. And state governments have to ensure that the food grains reach the needy, and ensure that within the state the movement of goods happens without any bottlenecks, and ensure that people are not unfed, they get their meal properly. And I think this is the commitment that state governments have made during the conference call with the Prime Minister, that there are workers and laborers from other states in each state, and each state has committed that those workers will be taken care of irrespective of the state to which they belong.
Correct.
Because traveling back to their home state was impossible since the lockdown was announced with just 2 days notice. So
Absolutely.
it was important that, and I think the state governments have the potential to work with large corporations in the respective state. Like I mentioned earlier, some of the large corporations have already announced, particularly those belonging to construction sector, that they will take care of the workers at their site, even if it means incurring some losses, but on humanitarian grounds. So this is where a state government can work more closely with an NGO network or a corporate network which is operating in that state, and ensure that the livelihood issues are taken care of. And the last point that you had was what is that we can do. And as I mentioned earlier, that by following this discipline, we are not only contributing to the safety and health of the society, but we are also contributing to the economic well-being of the country, because we'll bring back our economy fastest on track. And not only it will solve livelihood problems, it will solve employment problems, it will solve problems for the SMEs. We collectively are going to set a great example for nations around the world, which is going to create a very long-term ramification of our actions. And those ramifications are going to be only positive. So, for example, it will create potential in terms of tourism, education in India, and many other domains. And therefore, one of the commitments that we should make personally over the next couple of years is that if we can make a contribution to our nation, our contribution can be by using services domestically, whether it is travel or any other, by buying goods which are manufactured domestically, so that and particularly handmade goods and our handicrafts, which are such a rich tradition. If we are able to focus our expenditure on such things which are sustainable, plus which are very livelihood supporting, I think we would have supplemented the government's effort in our own way, and we can accelerate the recovery from this pandemic from an economic perspective in a much faster way than many other nations. I think that's the way I would sum up.
Absolutely, sir. Thank you so much, sir, for sharing your valuable knowledge, experience, as well as your time. This discussion was definitely much needed and insightful. So, I would like to urge all the viewers that, like sir said, by staying at home, you are not just taking care of your health, but directly, indirectly, you are also making sure that the pandemic doesn't spread and the economy get back to its normal strength as quickly as possible. Thank you so much, sir.
Thank you. It was a pleasure having this conversation with you, Asmita.
Thank
Take
you.
care, stay safe.